Hey everyone, welcome back to ASX Market Watch and charting trend signals around the world on all the world indices. Guys, I'm going to make it really quick because there's a lot happening in the world markets. As you know, we look at the entire world. I'm going to start with China this week. Enough of the jibber jabber. Let's just jump straight into it, guys. Last week, let's just quickly go into it. I mean, over the last few sort of 6 to 8, well, let's say over the last year, we've had a short-term entry signal right here. I'm not going to go into the reasons why, guys. We had a short-term exit signal way up here, and again, no need to go into the reasons behind it. Check it out. We called it well before it happened. It was quite phenomenal, and it's not rocket science when you get into it, guys. Just recently as well, we had this little section here, and if you look at last week's, dead set last week's, this is the exact call that we made. This is a little continuation pattern. Call it a Davis box, call it a pennant, a flag, call it anything you like, guys. And the best thing about it was happening right on this trend line. So that's where the support was happening. I said if it closes down below that level, it would mean bearish. Like, it basically would mean that the price would follow through to the downside. What happened? Well, it did break out to the downside, and shablam! We've had 5 consecutive down days on China's Shanghai Composite. So again, China is beginning its downtrend again in earnest, guys. So this is something to be very mindful of as you invest, even if you're investing in resources in Australia or even around the world. China is a massive force for resources at the moment, and quite frankly, according to the chart, the chart is definitely showing signs of weakness there. So potentially the economy is as well. Anyway, that is that. Next is the All Ordinaries, guys. Really quickly. Probably about 3 or 4 weeks ago, we called an exit signal. Shablam, right there. Apart from the fact as well, guys, that we've got this massive resistance at 5,000. Again, no need to repeat myself. We've been calling it for months and months and months, even potentially years. And yeah, dead set, look at it. I mean, obviously, we had a little short-term entry signal right back here in August 2010. Fantastic move of about 5 to 10%. Got some great gains out of the market before it hit that resistance of 5,000. And again, 5,000, just a big psychological number. And it's also the 50% retracement of the bear market. Again, I've been through it before. No need to go into it again. Where are we at the moment, guys? We've still got, really, a lot of people are starting to get excited again. And if you look at it from a longer term point of view, here is our beautiful uptrend. Beautiful, beautiful, beautiful. It is awesome. Very nice looking for a trend line, if I do say so myself. This is what we've got. The market, where has the market found support? Shazam! At the trend line. Of course it has. We already knew that it would. And a couple of weeks ago, that's exactly what we said between 4,700 and 4,600. What happened? Well, pretty much smack bang in the middle there, didn't it? Well, how do you like that? I pretty much love that. I think that's fantastic. But this is the kicker, guys, because in all seriousness, yes, it has found support right there. However, all it's done is had 2 up days from there. This does not start a new trend, according to my rules anyway. Some people it might, and I respect that. But according to the rules that I've been using personally, which tend to be working extremely well, by the way, that does not constitute a new uptrend just yet. What do we look out for if we want a new uptrend? We want it to cross this trend line for a start. So to be up around here, really we're looking around 4,800 to 4,900, and it would have to make a little zigzag pattern up. Again, nothing too fancy, just a little zigzag pattern up on a daily chart. Not rocket science. Now, apart from that, guys, you want to watch out for that resistance at 5,060. So this is where things start to get a bit hairy. In the meantime, the downtrend does remain. And you know what we'll probably find? We'll probably find a little bit of consolidation around this level. We'll see a bit of up and down, maybe a little sideways movement between 4,600 and 4,900, guys. Be very mindful of this, because this is potentially just consolidation for the next down move. At least that's the way it's looking on the charts at the moment. The downtrend remains. There's no new uptrend as yet. It has found support. Yes, that's exactly where we said it would. Apart from that, that's all I've got to say about the All Ordinaries. Again, it's not rocket science. Very, very simple stuff. I hope that makes sense. And next, we've got the Dow Jones. Dow Jones, really quickly, had a breakout above La-di-da-di-da, 12,469. Had a short-term up move. I mean, that was fantastic for a while. Obviously, guys, if you want to get nitty-picky, we called a new uptrend way back in September 2010. And since that day, we've had probably about a 25% move on the Dow Jones. So anyone in America trading that market, super happy days for you guys. Because as you know, if you get a 5 to 10% move in the market, guys, what can you get? Like, that means that some stocks are actually even outperforming that. So you might get stocks that make a 50% move, a 60% move, maybe even more. I'm not going to give you crazy figures, but you get the idea. You know, you've seen stocks that go 100% or more, and that's potentially what can happen when you get good moves in the market like that, because 3 out of 4 stocks follow the overall market. And again, I'm not going to sort of repeat myself. Sorry if I do, guys, really sorry. But you know, I just try to get it into your heads what can happen in the markets. It's good stuff. It really is. Okay, now here we are. So what we've got, it's crossed the resistance. It went up, and then it came back down. And now where's it finding support? Basically at that exact same place. Guys, what I've done as well is I've flattened the trend line here. So what that means is on the Dow Jones, we've got new trend line support at 12,200. We haven't quite had a zigzag pattern down yet because of this really long tail bar here. See this one? It's closed on its highs, and as you can see, the market hasn't really been able to close below this level as yet. So if the market does close below that, next level is that trend line, but that would be counted as your zigzag down. That would be potentially a little short-term exit signal if that were to happen, if it were to close below that 12,300 level approximately, guys. Yeah, so that's just something to be mindful of on the Dow Jones. The FTSE in Europe, over the last 6 to 8 months, we've been calling this sideways movements, and you know, like, it's a little bit boring, but we said it last week as well, more sideways movement. What's happened? Well, more sideways movement has happened, that's what. So again, it's happened exactly the way we sort of said it would. And I mean, it's not that we're predicting the future, it's just that we're looking at the probabilities. Again, not going to go into it in too much detail for you guys. I mean, you guys are smart people, you can figure it out. It's not rocket science, very simple stuff. What we've got, however, is we've got strong resistance at 6,100, strong support at 5,800. Guys, well, I mean, until it breaks out to the upside or the downside, there's really no reason to expect that this sideways movement will end. But it's got to end eventually. I wouldn't make a move until it actually did physically break out one way or the other. And those two levels are 6,100 and 5,800 again, guys. So again, not rocket science, very simple, very, very simple. The Nikkei, again, this is something that we've absolutely nailed over the last couple of months. Probably in April, March 2011. Called a short-term downtrend 3 days before the crash. Happy days, la-di-da. We've got this short-term entry signal at the very, very bottom of the market. Now, I'm not saying that I called the bottom of the market, but, well, I called the bottom of the market. And again, it was just a series of probabilities. It's just, and you know, I could have been wrong. And so you have to play those probabilities. And again, I hope that makes sense, guys. If it doesn't, check out the course on my site. Man, it goes into that in a lot of detail. It'll go into risk. Risk is the most important thing in the market. Now, last couple of days, we had a short-term exit signal 2 weeks ago, and basically the market's sort of gone sideways and down since that time. So yes, it has continued down since that little exit signal. Guys, I would be expecting heavy resistance at 10,000, okay? So 10,000 again, very similar to Australia. In the Asian region, 5,000 is a big psychological number for Australia. Likewise, in Japan on the Nikkei, 10,000 is a big psychological number. If it was to go above 10,000, guys, new uptrend. That's what I would say right there. Apart from that, Hang Seng. What have we got? Hang Seng. Okay, Hang Seng again. Bah, what is it? More sideways movement. And that's pretty much exactly what we've been saying. 22,000 and 24,500. That is what we're looking at, guys. And yeah, that's really, I cannot call a new uptrend. We almost had one, didn't quite follow through. So no go, no love. That's just what it is. So still the sideways trend remains. If it breaks out one way or the other, that's the way that you would usually want to be trading. Again, with the proper risk management in focus, guys, not risking too much, but not risking too little. That's how you roll. BSE 30, the Bombay Stock Exchange in India. Fabulous India. Fantastic India. What have we had? Probably 3 months ago, called a medium-term uptrend. What did we get out of it? We got a short-term uptrend. So not bad, not fabulous though. However, at that same time, we called resistance at 19,800. What happened? We got resistance at 19,800. Why did we call that? Because of that downtrend line right there. Again, very simple stuff, guys. Very simple stuff. And since then, we've had more downward moves. Guys, I called very similar thing. There's a little continuation pattern. Called a breakout of that. More moves to the downside. And we did get more moves to the downside, but now it's sort of coming back up again. As far as my personal rules are concerned, that still remains in a downtrend, guys. For it to head back upwards, I would expect that the market would have to close back above this level of 18,750 approximately, okay? It would have to be a little zigzag pattern up. And again, it's made a nice move, like it's made a very convincing move off the bottom there. So some people might be trading that. I imagine some people are. For me personally, I would be expecting, see this little 45 degree here, that would sort of be the resistance, the next level of resistance for me. And it would have to cross that really for it to be an uptrend again, guys. And that, my friends, is the charts, is the world from a chartist's point of view. Love your work. Thank you for watching. It's been fabulous to have you here. I absolutely love sharing the markets with you guys. Great way to spend a couple of minutes on your weekend. Apart from that, I hope you learned something, or maybe just got a little bit of entertainment, or maybe weren't even bored to snores. I'd settle for that. That'll be fantastic for me. Apart from that, I will see you next week. Have a fantastic week. Happy trending, and bye for now, guys. See you next time.